And folks, as we do every Wednesday at 40 past the hour, we talk to our man Teddy Kekstadt. Look at this market right now. It is a great market to try out, folks. The Tiger Forex Report, right under the newsletter tab at TFNN. You hit that subscribe button. You can try it out. 30 days, money back guaranteed. Check it out. And, man, we got a market. Teddy Kekstadt, good morning.
Good morning, Tom.
So, where do we begin in this market, Teddy? We missed you last week. They were calling for you in the den. It was a busy week, but we got a lot to talk about, man. The market, of course, tariffs. But, a lot of investors, we see the dollar action. Yields, I've been talking about. Remarkable what's happening with yields. What are you watching most in this market? What do you want to talk to the listeners about and the viewers most of all, man? Where do we start?
Well, I like crude down $15 since last Wednesday, so I think that's not something to talk about. It's definitely influenced the yen. And the yield curve, wow, what's happened in the 10-year and the 30-year over the past week also, let alone today. So, we have some very extreme moves that have happened over the past just week that are definitely stirring up the currencies. So, and the volatility in the currencies, too, has been crazy. I mean, the Swiss has moved very radically compared to how it's normally been trading the past 6 months, especially. So you pick your poison. Where do you want to start?
Let's start with crude because, boy, okay. I mean, you pull it up on the chart, $57 down to 55. What do you make of this market?
Well, in the Forex Report, I said it was going to be bearish this week, looking for lower prices at the pump by the end of the week. I said a test of the 58 level was in the forecast. I honestly didn't think it was going to happen until next week. I'm happy that the market sold off that fast and that hard, but I really didn't see it coming that it was going to really hit there by today. So
remarkable.
I like the level. I would be very careful being a buyer at these levels. I like it as a sell rally forecast. I think if you're not, especially with the gap lower in crude today from the close to the open. So, all gaps get filled typically. So I think that you probably we'll see over the next couple of days a spike back up towards maybe like the 60, 61 level, but then come back to where it's at. I like it at 58 and lower. I think longer term by month's end, we could see us setting maybe where 57 becomes the middle of maybe a $6 range trade, where we'd be probably testing maybe the lower 50s and bouncing between maybe 60 and $52 for maybe probably going into Memorial Day weekend, if you will. And that also will help with the yen, which is definitely, it's got down to what was, I think, 145 now. That's a big marker for the yen. So I like the yen as a sell rally forecast too. That's overcooked. It's due to have a nice move to the upside, but not with this pressure on the dollar. It's impossible. The fundamentals and the technicals right now are just still, right now they're in that power band mode. It's kind of like when when you're hitting the gas. Well, you know what I'm talking about. Like, so it's not like we're just accelerating. We're hitting that power band. It's like, the bears are, especially within the crude oil market and the U.S. dollar yen. They're in control right now. So you got to be very cautious and pick your points, and especially if you're going to try and counter trend. I would highly suggest you be very nimble if you're going to do that, because I can see you getting really chopped up.
Yeah, counter trends. That's a tough one with these trends right now, right? And I love how you lay out whether it's crude, and then you went to the yen, which was great. I was going to ask you, for those that haven't heard you talk about it, Teddy, because I know, crude prices at $55. I was pulling up the chart of the yen when you're talking about it. I have it at 144 right now. In January you were pushing almost 160. Right. But for those crude prices, for the listeners that haven't heard you, and the reason why I understand it is because of the fundamental lesson, you gave me, my dad, in terms of America being a producer right now, really, Japan being a consumer of crude, and how that relates to dollar yen and how those currencies move. Could you just walk through that one for the listeners that haven't heard that one? Because I love it, and what's going on right now, kind of so timely.
Sure. So we all know that the interest rate fund differential affects currencies. Then you look at something like Japan. When you have something that you're very dependent on, like oil, which they don't produce whatsoever, the price of oil is going to be very indicative of their production costs. So especially right now, considering where oil has been, this is a huge relief on the production side for Japan, even if it's only short-lived. Just the relief that they've had so far from the slide in crude. I would say that you're going to see that impact in their economy really hit over the next 3 to 6 months. So that means that strengthens their currency also. And also the lower crude costs, you got to remember the Japanese buy crude in U.S. dollars, so they have to convert yen to dollars as well. So when you add all these together, the lower those costs go, the less the value is of the dollar versus the yen. And as that keeps on, those fundamentals stay solid and in place, then that's how you develop the bearish trend in the U.S. dollar yen. Conversely, if all of a sudden oil was to start to turn around, and all of a sudden go back up to, like, even if it went back up to say just $70, that would definitely set up the U.S. dollar yen relationship to have a correction to the upside, meaning stronger dollar, weaker yen. Also, because it would affect the cost and also mean that their economy, it's going to put a little drain on them in that short run period for that kind of situation. So fundamentally, you can help to figure out what side of the market to be in. In other words, if crude oil is dropping and interest and yields on the U.S. Interest rate markets are also dropping, it's very hard to be a buyer of U.S. dollar yen because you're fading the actual fundamental trend. Now, technically, you may have whatever signal system you have or method may say, to buy right now, but you have to take into account that you're going against all the fundamentals. So you have to assume, like, especially in this situation, that the fundamentals are going to change. Like, if you're getting long to U.S. dollar yen right now, you're basically betting on crude getting a rally and also interest rates going higher. You know what I'm saying?
I love it, and that's really it's a great.
If you don't,
thank you so much, man, because I think a lot of people, I was unaware, and we know how currencies, of course, are fundamental to the country that underlies them or that they underlie. But it is awesome when I don't think a lot of people would correlate to instantly the crude, and it makes such perfect fundamental sense that, yeah, they're a consumer of that good. They got to do it in dollars, and now they're only paying $55 US versus paying almost $80 US for a barrel of crude not that long ago. It's great, man. How about dollar Swiss? Can we talk about dollar Swiss? Because, boy, that is a move, man. My best friend lives in Switzerland. He's buying a house right now, Teddy, and he's excited that rates are actually crashing over there. No, I mean, there's a lot in dynamics, but he is right. But man, quite a chart. I have it up. Dollar Swiss.
So yeah, it's had quite the move over the past week. I mean, the Swiss is a very stable currency. It trends, and overall, the trend in the U.S. dollar Swiss is a bear. It has been for years. It is even if the dollar gains strength, no matter what, it's in a long-term bear market against the Swiss. Now you have all the reason also for it to dump, with yields being so low and with the dollar falling against other currencies. That's why you're getting the very bearish momentum there.
Can you stay with us for one more segment, Teddy?
Sure.
Perfect. Folks, we'll come back. We'll finish this conversation. We'll talk a few more currencies. We'll talk a little gold. I want that take as well. We'll be right back, folks. Welcome back, folks. We have markets in the green. NASDAQ 100 up by 1.3%. S&P's up by 0.6%. You get the Dow up by 0.3%. Apple up by 3% itself. Some big action in these markets. We're talking to our man, Teddy Kekstadt. Don't forget to check out his Tiger Forex Report, folks, with all this action. And, Teddy, how about the euro? I just want to jump to, of course, a huge component of the dollar index, euro US dollar right now, we're pushing 110, kind of bumping up against an upper boundary. What do you think about the euro US dollar right now at 110.36?
I think it's riding the yield curve trade right now, but it's a rally to sell. It's definitely a rally to sell. Same with the pound.
All right.
So their economies are collapsing.
So. I was going to ask the Treasury auction today. You look at that at all in terms of the $40 billion Treasury auction? Are you looking for some volatility? How do you approach an event like that? Is that on your horizon or a nothing?
If it was a bigger auction, yeah, but it's really not a big auction. I mean, honestly, with $40 billion.
Perfect. So. And how about gold? What do you think of this gold run, man? Volatility everywhere. We're up $104 right now, technically on the session in gold. Remarkable. What do you think?
Well, I like the high that was set last week, and I think it's a key level. If it gets above there, I could see it stretching up to maybe 32.25, around 32.25, and then I would be very, very cautious at those highs. Like right now, technically, the high that was set last week, harmonically off the low from November 14th of last year that this whole trend started off of, that's really the buffering right now. That's a great high that's set for, obviously, we've had a little correction. I like the rally today. I think if you're going to challenge those highs, once again, if it gets rejected, then I think you're going to set up a nice range trade in a correction that could probably take out the lows from a couple days ago. So I think you're going to see a lot of volatility. If you get above it, like I said, I think you'll get to 32.25, and I think that will definitely be a short-term exhaustion top before you do see a correction.
$3,200 for 1 ounce of yellow gold. Not bad.
Yep.
Teddy, man, thank you so much. Folks, check out that Tiger Forex Report. You get a month of it, some great information, especially with what the market's doing. Teddy, man, have a great week. We'll talk to you next week.
Thanks, Tommy. You take care.
Thank you.